market on close. It's time for Options Corner. So with that, we'll bring in Kevin Green joining us to talk about the S&P, and we'll get to the VIX in just a minute. But Kevin, thanks for being with us this afternoon.
Appreciate it, Marley.
Of course. Now, what are some of the things you're noticing today with the S&P?
Yeah, it's boring. It's a boring market. We have seen a lot of compression, and we've actually only have around a 20-point range for the S&P 500. So if you kind of look at it earlier this morning, looking at that 6,000 level is the key area of support that has been able to hold here, but we have not been able to break above the 60-20 level, which has gained a lot of attention here over today's session here when it comes to volume. A lot of calls being sold at that level for now. So we do see a little bit of a call wall there. But for whatever reason, if we're able to break above that going into the close, I'm still looking at 60-40 to the upside here for the S&P 500. And then going into the close, as long as you can hold 6,000, I think that's going to be a win for the bulls. Not a lot of volume activity taking place here today. And we have a fairly tight range, around 20 points here. So if you're looking between the 60-20 level to the upside and the 6,000 level to the downside, you're looking at around 60-10 as your area of balance for the market. So overall, once again, kind of a boring day on the options front. A lot of volume when you're looking at options volume, but nothing that's really grabbing the attention of creating some type of trend either to the upside or downside.
And it looks like, as I'm looking at one of your coming charts here, that we're seeing our volumes actually dip off.
Yeah, for now. Now, this volume chart that we have for the S&P 500 total composite volume, this is looking at the aggregate of all of the components within the S&P 500, the volume that they have. You are seeing a little bit of a drop off here. Now, this will change a little bit going into the close, but we had last Friday actually a little bit of a lower bar than what we saw on Thursday. So that's something to kind of be mindful of. Usually on Fridays, we actually have the larger volume bars throughout the whole week. And today we probably will have a little bit less volume here. Now, we are obviously going into the summer season. That also kind of coincides with volumes getting a little bit lighter, also liquidity kind of drying up. I think today we were also expecting a little bit more when it came to the China trade talks. It seems like they're going to actually extend this conversation for tomorrow. And so without that headline or getting any type of update as far as progress, the market probably held off on trying to place or position any trades going into obviously tomorrow and then looking at Wednesday for inflation. And then you had the Apple event, which was kind of a nothing burger, more of the sell the news event, but that really didn't drive that much volume outside of just Apple itself. So overall, light volume day, a lot of compression. Let's see how we're going to be able to resolve this over the next couple of trading sessions. But you would hope that volatility actually kind of creeps up a little bit. We just don't have these 20-point, 30-point range bound days, because that makes it a little bit difficult, especially if you're an intraday trader.
And you just mentioned volatility, so let's jump into talking about the VIX. Obviously the last 9 weeks, we've seen a staggering drop off in the VIX. I saw some refer to it as the steepest crash in history earlier today. What are your thoughts on that? I mean, we're still, S&P is still, right around that 6,000 number, kind of shrugging off all of these geopolitical concerns or noise, as some people are calling it. Do you think we're going to see more movement in the VIX, or are we going to see this continue to creep downward?
Yeah, well, I think that we will actually see some action within the VIX here over the next week or 2 weeks. Some of that's going to be mechanical. But also when you're kind of looking at the VIX minus VIX futures curve, we have to be mindful here. We are now getting into a situation where the normalization is actually pretty aggressive to the downside. This purple channel that I'm representing here on this daily chart just shows you a 1 standard deviation move either to the upside or downside. So over the last year, 66% of the time, this backward or this normalization when it comes to the VIX, meaning that the VIX future is priced higher than the VIX contract. And so usually we are not with below this purple line to the downside here. Now, we did have the same type of situation happening around middle of September of last year, where we saw really compressed volatility, and that lasted for about 6 or 7 trading sessions before we started seeing a re-ramping or re-rating to the upside here. We're in around day 5 of this, the 5th day of this type of trend here. So I feel like we're getting kind of closer to an extreme to the low when it comes to volatility. And we know that it's kind of like this exponentially, oscillating type of index that can re-rate higher fairly quickly. I would kind of expect that as well. Obviously, we have inflation this week. We have the Fed meeting on Wednesday of next week. We have VIX expiration on Wednesday of next week. We have the quarterly expiration for the June quarterlies next week, Friday as well. There's a lot of events on the calendar that can actually re-rate volatility higher, and it doesn't have to be a negative news event. It could just be structural or mechanical in nature. So I'm actually looking at the vol space and saying it's relatively cheap here, even though we have green on the screen and we've been having really decent days. If you do have a concern that maybe we have a pullback, a 5% or even 8% pullback from the lows, then this might be actually a really decent time to actually buy protection because it's relatively cheap, especially if you're looking at something that's 30, like a 30 delta option, something that's 30% probability of it actually going into the money. Those are relatively cheap compared to maybe the portfolio that you're trying to hedge.
Mm-hmm. Well, great insight as always, Kevin, and thank you for keeping an eye on this. I'm sure we'll continue talking about it as that data comes out later this week and into next. Thanks again to Kevin Green.